Hi, folks. Best-selling author and certified tax specialist Navy Dowdy here. Here's the quote of the day. A pessimist is a person who feels bad when he feels good for fear that he'll feel worse when he starts to feel better. Don't be a pessimist. The world usually only ends once, and probably not today. So, having said that, here's some good news. Talk about not being a pessimist. Little bit of sliver of good news on the tax front. I'm going to read to you the new adjusted numbers, and at least we've got that going for us. Married filing jointly has now raised to $89,450 before you get into the next tax bracket. That's up a bit. For the really high income people, the top bracket hits $693,750. How about the standard deduction? It's up $1,800. That's good news. How about the childhood tax credit? They didn't raise that. The other thing, of course, they didn't raise, unfortunately, and as far as I can tell, never will, is the level at which you get into having your Social Security income taxed at 85% of your Social Security, and that for a married couple is at $44,000, probably going to stay the same forever. Eventually, everybody will be in that category where 85% of their Social Security gets taxed. How about capital gains up to above $89,000 to start capital gains taxation? And to be in the 15% bracket, you can go all the way up to $553,856. How about gift tax? So you pay tax on gifts. The exclusion now went from $15,000 up to $17,000 annually. How about Social Security? We're going to get 8.7% increase in Social Security this year. Now, of course, some of that will get eaten up by, as it always does, by Medicare increases. And of course, offsetting that is the fact that now the first $160,200 will be subject to, of your earned income will be subject to Social Security and Medicare tax. And then the Medicare tax goes on. There is no limit on how high your earnings are taxed for Medicare. I put a link below to the IRS document. It's 18 pages long, outlining all of these increases. One last one for those of you with a lot of money. The estate tax exemption for next year, now this is for 2023, has risen to $12,920,000. And for a couple, of course, it would be double that. Now remember, that is going to drop in half in 3 short years. January 1st, 2026, that exemption will drop in half. Now, it'll probably be adjusted for inflation between now and then, so we can't tell you what exactly it'll be. I'm guessing it'll be about $7 million per each of a couple on January 1st, 2026, but nobody knows for sure. So those are some good news. Now, obviously, what's this all about? This is just dealing with one part of my 3 coming financial tidal waves, which I have relabeled to call them the ultimate financial tsunami, because that's what I believe is coming. Take a look at it, see if you think that's true. And for those of you who like this content, subscribe to this channel, just click the link below. You can also click the link and go to the IRS website and check out the exact numbers for many, many different things. I just gave you a few highlights. Summary is our exemptions are up a little bit. Our limits before we pay taxes up a little bit. It's not really going to keep up with inflation. These 3 financial tidal waves, rising taxes, rising interest rates, and rising inflation, are outpacing everything. But at least here's a little glimmer of good news for the week. I'm Navy Dowdy, and remember, financial fitness can be beneficial to your wealth.